Essentially, the company was bleeding money like crazy, and just if we didn't solve these problems in a very short period of time, we would die, and it was extremely difficult to solve them.
How close to death did you come?
Within single-digit weeks.
22 hours a day, or like what? How many?
I was working, so 7 days a week, sleeping in the factory. I worked everywhere I worked in the paint shop, general assembly, body shop.
You ever worry about yourself imploding? Like it's just too much?
Absolutely. No one should put this many hours into work. This is not good. People should not work this hard. They should not do this. It's very painful.
Painful in what sense?
It hurts my brain and my heart.
How Elon Musk bankrupted a hedge fund. Ever wonder what it would be like to be Elon Musk, aka the Tesla guy worth over $153.5 billion? The guy who has an insane amount of money from investing in cars, seems super intelligent, but also seems to love participating in meme culture? You're probably tired of hearing this quote, but with great power comes great responsibility. And that truly applies to this guy and the situation he's put a certain hedge fund in. With social media and its influence growing stronger as each day passes, especially when it comes to rich and famous people doing all the tweeting and the opinion making, it doesn't come as a surprise when Elon Musk bankrupts a hedge fund. But how did he do it? What even is a hedge fund? And what happened with GameStop? If you haven't already heard about Elon Musk, then get out of the rock you're living under. For starters, Elon Musk is currently 49 years old and is a South African-born American entrepreneur. Musk was born to a South African father and a Canadian mother. In his teenage years, he exhibited a talent for computer programming and entrepreneurship. At the age of 12, he created and sold a video game to a computer magazine for $500. Musk left South Africa in 1988 after obtaining a Canadian passport because he was unwilling to support apartheid through military service. And well, he saw more economic opportunities in the United States. From co-founding and selling PayPal to being the CEO of SpaceX and Tesla, it's no wonder he rose to fame in a snap and remains there to this day. If none of these companies mean anything to you, then I'm sure being the richest man in the world is something you can understand. As of April 2021, Elon Musk is worth $163 billion. Still, there's a lot more to him than all these extravagant titles and things he's done over the years. One could go hours and hours about who he is and what he's done, but we're all here for the one thing he's done: bankrupting a hedge fund. If you were the richest man alive, had several companies under you, what would you be doing? You might go on an endless vacation. Some of you might even give other people endless vacations. Or maybe line up your garage with cars of all sorts, both vintage and modern power cars. But for Elon, this isn't the case. The man would rather sleep in his factory and spend a couple of minutes on Twitter interacting with fans and the general world at his whim. So, how did Elon Musk manage to bankrupt an entire hedge fund? Well, it all peaked with a one-word tweet. Of course, with many things nowadays, it all started with a certain website called Reddit and a tweet. First, a little background. Many people have described the Reddit-fueled market mania that sent GameStop and other heavily shorted stocks surging last month as an example of retail investors going up against the Wall Street establishment. GameStop's stock was already going down. With the switch of games being distributed online, the market of physical game copies inevitably died out together with GameStop. For a certain hedge fund though, they saw opportunity instead. The New York-based hedge fund, Senvest Management, made its investment in GameStop so they could short sell it, owning more than 5% of the company, according to the Wall Street Journal. As the journal reports, Senvest paid as little as $10 for most of its shares, and when the value of GameStop stock rose to over $400, the hedge fund sold their stock and generated $700 million in profits. If you aren't that eloquent with business terms, short selling may sound like an entirely new word to you. Let's take a step back for a second and review. In a nutshell, short selling is opening a position by borrowing shares of a stock or other assets that the investor believes will decrease in value. The investor then resells these shares at market price to buyers willing to pay. The trader is hoping that the price will drop so that the shares can be purchased at a discounted cost before they have to be returned. Losses on short sales are theoretically unlimited since any value can climb to infinity. Short selling is an investment or trading strategy appropriate only for experienced traders or investors. It entails betting on price declines of stocks or other securities by selling a ton of stocks, hoping investors would panic and sell too. Wait, isn't that illegal? Should you be allowed to control the market and influence the decisions of hundreds of people, yet ultimately buying your way into the market and selling at a higher price instead? Short selling has a long line of history. The author of the classic book Short Selling, Tom Tooley, offers an insightful history of short selling. Short selling is not a new phenomenon. Its history stretches back centuries to the establishment of stock markets in the Dutch Republic in the late 1500s, when investors realized that they could not only buy a stock long, but could also short a stock. The Dutch Republic underwent a tremendous boom. But, like any capitalist wave, it ended not with a thud, but a thunder. The markets crashed in 1610. Investors wanted someone to blame. Why not short sellers? Don't they profit when stocks fall? Didn't they put selling pressure on the markets? As has occurred throughout history, the Dutch stock market consequently prohibited short selling. But, as has also been the case throughout history, the ban did not last long. Investors found ways around it. Unfortunately, while short selling should be illegal, people in power have way too much time figuring out loopholes and paying people to create loopholes in the system. While the rest of the world give up and let rich people play rich, several 100,000 Redditors had enough. The R Wall Street Bets, or WSB, is a highly speculative broker subreddit, which is a thread or forum on Reddit. The Reddit group has been inundated with 3.5 million Reddit users, and those numbers only continue to rise with new traders and investors. This community is what caused the massive disruption to the financial market. GameStop, GME, a brick-and-mortar business that primarily sells video games and consoles, received a strong bullish recommendation on September 19, 2020 from Redditor Player896. Bullish simply means that the stock is expected to go up. Since November 2015, stocks of the company have steadily declined due to a shift from physical media to digital games. The arrival of the COVID-19 pandemic did not make their case any better either. This is why GameStop was Melvin Capital's target, because the market for it was already going down anyway. Imagine you're a huge hedge fund and you think you can get away with anything, even something as sketchy as short selling. But everything changes when you get caught in the act by the likes of a Redditor. Well, it's not so hard to imagine for the folks over at the hedge fund Melvin Capital. It's a living nightmare for them. In November 2020, a Reddit user named Stonks Flying Up posted GME squeeze and the death of Melvin Capital, superimposed with text that Melvin Capital got greedy, as well as an explanation of how a short squeeze occurs. This clip concluded with a photo of an explosion with the words Melvin Capital splashed across it. Further Reddit posts and videos about Melvin Capital have appeared since then, and Reddit users have even started discussing Melvin Capital's shorting of other stocks, such as Bed Bath and Beyond. One Wall Street Bets user wrote, "Here's the next play after GameStop to ruin Melvin Capital even more." One hedge fund manager, who is also a short seller and has been watching the Reddit forums on Melvin for months, said they made it their effing life mission to get him out. They are the stock version of insurrectionists. Because of all this, in January, Melvin Capital reportedly lost $4.5 billion of assets after its massive bet that GameStop stock price would fall turned sour, the Financial Times reported. A $2.75 billion cash infusion from previous investors helped to save the fund from collapse. GameStonk! Musk tweeted shortly after GameStop ended the day with more than 7 times its value a month ago. The GameStop stock went up nearly 93% at $147.98 when it was initially less than $20 per share. The trades closed out at $244.51 at the end of the week. Wall Street Bets succeeded in doing what they wanted to do, destroying Melvin Capital's plan to short the GameStop stock by driving GameStop higher than ever, a short seller's worst nightmare. A spokesman for Melvin Capital told the Post that the firm has closed out its short position in GameStop as it repositioned our portfolio over the past few days. These are not normal times, and while the "Our Wall Street Bets" thing is fascinating to watch, I can't help but think that this is unlikely to end well for someone, stated Jim Reed, a managing director of cross-asset research at Dutch Bank. Burry criticised retail investor behaviour on Tuesday for trying to boost GameStop's stock and attack Wall Street shorts, calling it unnatural, insane and dangerous. This, of course, was a complete and utterly piteous comment. If hedge funds were playing dirty with short selling, why couldn't a bunch of Redditors behind computers do the same? Elon Musk especially had a strong comment about this, since his companies have been victims of short sellers for as long as he could remember. Musk's tweet, GameStonk, was a reference to a meme about stock trading and profits that originated from Reddit's Wall Street Bets. He embedded a link to the Reddit group Our Wall Street Bets to let new investors and traders see what was happening, maybe in the hopes that they'd rally too and buy stocks. There are now over 2.4 million members in the online stock investment chat group. Their battle against institutional short sellers on GameStop has resulted in an eye-popping 750% rally in 2021 as retail traders seize the opportunity to take advantage of an institutional sell-off. Musk's motivation? In part, it's revenge against short sellers who had targeted Tesla in the past. Then there's his legendary love of video games. Regardless of his intended actions, it's clear that Musk is trying to help individual investors against Wall Street's heartless hedge funds by using his outsized influence to help balance the playing field. Other celebrities have also dipped their toes in Melvin Capital's river of blood, with the same outrage against hedge funds and short sellers. So, did Melvin Capital go bankrupt? What's in the cards for the poor hedge fund that's been defeated by a group of Redditors and a guy with a bunch of electric cars? CNBC reports that Melvin bailed out on the bet on Tuesday afternoon, a day after it received a $2.75 billion bailout investment from Citadel and Point72 Asset Management, run by Ken Griffin and Mets owner Steve Cohen, respectively. Despite widespread speculation about Melvin's imminent bankruptcy, the company has said that it would remain in business. The social media posts about Melvin Capital going bankrupt are categorically false, the Melvin spokesperson stated. Melvin Capital is focused on generating high-quality, risk-adjusted returns for our investors, and we are appreciative of their support. Although GameStop stocks have managed to tether back down to $92, Melvin's billion-dollar loss is still a resounding victory for Redditors, a dent in hedge fund history that will never be erased. A lesson is to be learned here. You can be some big shot hedge fund managing billions of dollars, or a lone wolf investor who looks down on people such as gamers who you would never suspect to be your competition in the investing world, and still go bankrupt due to said gamers and a guy who is also worth $1 billion, has a car company, and also happens to be the Musk himself. Redditors have a bad reputation of being the bottom of the barrel and the scum of the internet due to their dark humor that probably won't fly by with today's cancel culture, but you've got to give them credit where it's due. Personally, my only knowledge of stocks is selling turnips for a higher price than what I originally paid for in Animal Crossing New Horizons, so it's pretty impressive how they had enough knowledge on the subject to pull this off. Sticking up to a bunch of Wall Street investors who have seen more money than most people will ever see in their lives takes a lot of guts and nerve. Not to mention, they've got meme connoisseur and all-time infamous internet favourite Elon Musk to lend them a hand, so they've proved that anything is possible. GameStonk!